Right, this is part 3 of the video on final accounts, looking at the adjustments. The only one we need to deal with now is the bad debts and the provision for doubtful debts, which is two separate things really. So first of all, let's look at the bad debts. We've got the ice cream cafe, we've got the trial balance here, and we've got bad debts there at the bottom of the trial balance. Now when it says bad debts, you've got an entry there. Now this is an expense. One of the expenses of running a business is that some people, some of your debtors, people who owe you money, some of them won't pay you. So what's happened is the company has tried to get the money from the debtors. They've gone through all their credit control procedures, phoning people up, sending letters out, sending legal letters, taking them to court maybe, and eventually they've realised they won't get that money from their debtors, and so they've written that debt off. They've just given up. And so any debts that have been written off like that are classed as bad debts, one of the expenses of running a company, and bad debts go in the expenses of the profit and loss account. So just quickly move down to the profit and loss account, and we can see in there you've got your bad debts there in the expenses. Okay, that's bad debts. Now we go on to this other one, which we are calling doubtful debts. I've got the spelling wrong there, sorry about that. So doubtful debts. Now the reason for this provision for doubtful debts is because what we want to do, we've got debtors in the balance sheet here. This is the balance the trial balance. This is the trial balance at the end of 2005, and on that date we are owed £8,776 from our debtors. Now we know we're owed that money, but we also know from experience that we may not get all of it. Some of those debtors will default, they won't be able to pay us, and from experience we'd have an idea of sort of a percentage figure of the debtors or of the money owed that we wouldn't get in. So what we've got further down here, we've got provision for doubtful debts to be 4% of debtors. So from experience we estimate that 4% of our debtors, 4% of the money owed, we won't receive. So in the balance sheet what we want to do is we want to show the debtors, but we don't want to show it as that full amount because we're not going to get that. We've got to show it as the amount we expect to get. So what we do is we calculate 4% of debtors, which is actually £351. 4% of this is £351, and we deduct it from the debtors. So in the balance sheet we show the reduced figure, 8776 minus 351. Quickly down to the balance sheet, a couple of pages down. Here's our balance sheet, and we've got the debtors there. You see that is not the figure in the trial balance, that's the trial balance figure reduced by £351. That's our debtors. Now that's the reason for the provision for doubtful debts. But there's one further adjustment, and it's the adjustment to this that is sometimes confusing or unusual, that we've got to deal with. Now what we've got here is we've got in another entry in the trial balance, this is the trial balance, another entry here, provision for doubtful debts, 248 here. Now that provision for doubtful debts, that's the provision we had last year. At the end of last year we had debtors, we had a percentage that we assumed wouldn't pay, and we worked out the figures 248. That's the old provision. So 248 is the old provision, and we've just been talking about the new provision, which is 4% of the new debtors, and we've said that will be 351. So the new provision is 351, the old provision is 248. Now what we've got to do now, and you can think of this like a bag of money, it's not in fact a bag of money, but we can imagine it like that, is that we've already got a bag of money with £248 in it, which was the old provision set aside last year. And now we've got to increase that bag of money up to 351 to make the new provision. It's got to be made bigger, the bag of money. So we need an extra £103, the difference between the old and the new. The extra £103, and we've got to find that money from somewhere, and the place we find that money from is the profit and loss account. From the profit, we take it from the profit. So so we need to take £103 from the profit to increase the provision from 248 up to 351. So we do that, just go down, and we can see in the profit and loss account we've got an entry here, change in provision for bad debts, and it should be doubtful debts there really. For doubtful debts, 103 as an expense. So we've took that money from profit, the extra 103, and that's just to keep the provision of the right amount. And that's the changes you need to make. Now you also need to be aware that the provision, of course, this time the provision we needed, the old was smaller than the new one, so we needed to get some extra cash or money from the profit. It could be the other way round. It could be that the new one is smaller than the old. Now in that case we'd have the old provision with money there, and we wouldn't need all of it. We're making the provision smaller, so we'd have some cash spare, if you like, some money spare. And so what we do then is we add it back into profit. So where you get that situation, what you would do is you've got some money to add into profit, so you don't put it in expenses, you need to add it on to profit. And the suggestion there is we'd make a little section in here between gross profit and expenses where we put any revenues, any money we're adding back to profit. And so we put it in there, we'd say change in provision, and we put it in there, and we make sure that we add it to the gross profit. So we go gross profit plus any of these revenues, and then take off the expenses. Okay, thanks. That's the provision for doubtful debts sorted out. Okay, bye.